He joins us with some under-the-radar names that should be on your list. Let's bring in Evercore ISI Senior Managing Director, Julian Emanuel. Julian, welcome. I mean, Russell 2000 is down 2% year to date. S&P's up 3.5%. Tariffs could be a bigger risk for smaller companies, so why buy them here?
So it is, John, really a case of so bad it's good. What we did is we looked back over 30 years of data, and when small cap stocks have underperformed in the first 5 months of the year to the degree that they've underperformed large caps, what you tend to get is a very vigorous bounce in June, and that happens to coincide with the annual Russell indices rebalance this year on June the 27th. So we think that there's lots of reasons, particularly given the fact that when you think about small cap stocks, they are price takers, not price makers, and all of the uncertainty around tariffs, which obviously there's a long way to go between here and deals getting inked, but there's an expectation that we are approaching a landing area. This is a positive in terms of expectations for small cap stocks.
If I'm investing at home, though, I'm wondering, does historical seasonality even matter in 2025 when you got these 90-day tariff windows? You got whatever effect there's been on pull forward on imports. You got the questions about the consumers' credit situation in the back half of the year. I mean, how does all of that change what normally happens in June and beyond?
Well, it certainly complicates what, if you look at this year, has been an extraordinarily complicated picture to begin with. But we would argue pretty vehemently that the lows that we saw in April were the end of the bear market, and clearly you've had a very strong rally since. But when you think about where we're going in terms of policy and in terms of the idea that a recession has largely been taken off the table, although we may get weaker payrolls data, which actually counterintuitively is better for small cap stocks because their labor input costs are higher than a larger cap stock. And then, of course, inflation data, which basically, argues for reasonably robust pricing power. All of that conspire to be tailwinds for small caps.
Some of the names you have here: Centrus Energy, Cohen and Steers, Rambus, Sprouts, TG Therapeutics. Any theme running through those?
Really, the only theme that we would cite is that basically when investors look at these companies, the pace of earnings revisions is high. So essentially, these companies are going to continue to sort of they are raising their own bar relative to their peers in terms of earnings trajectories. And frankly, in an environment of this kind of uncertainty, you want a company that's expected to raise its earnings, really quarter after quarter, and the positive trend of those expectations.
Is there a pivot moment coming later this year, either end of summer, early fall, where if things have not played out the way you expect in this thesis, it's time to revisit?
There certainly could be, and when you look at the broad market in general, particularly at the S&P 500, you're trading over 23 times our estimate for 2025. So there is an argument that if there's difficulty in getting policy over the line, that this bull market, which we would argue is the resumption of a structural AI-driven bull market that started in 2022, was interrupted by this couple of months of sell-off and has resumed. But you could argue that there is a likely pause in here while markets digest the potential for policy going forward prior to what we would expect would be new highs later this year or in 2026.